Good morning, everybody. It is November 17th, 2023, 8:45 a.m. You are back watching another market open. It's Friday. Friday. It is Friday, right? I'm not getting that wrong. No, it is indeed Friday, November 17th. It is a Friday. This was one hell of a week, but we are here towards the end of the week, and we are here ready to get into the weekend. Today's a really, really exciting day because this Friday, I think, is going to determine a little bit of a preview of how we end out November. We've got 13 days left in November, then we got December, this kind of end of year rally. You know, it's funny. We're all waiting for this face ripper rally. This week was one of the weeks where we had the face ripper, right? I mean, the S&P is at 451 right now in the pre-markets. The S&P is up. We've gone from 410 on the S&P 500 to 450. So this idea that, you know, the Santa Claus is coming to town, end of year rally, we're kind of in the middle of it. I mean, I would say we're at least 60 to 70% there, if not 80 to 90% there of this end of year rally. Because where do we expect the market to be? A real end of year rally, I would imagine 465 is like, yes, Santa Claus came to town on the S&P 500 because 459 was the August high. Now a real like, all right, this is a new bull market. Probably we hit 478, which was the all-time high on the S&P 500. Don't know if we get there towards the end of the year, but being at 450 when we were at 410 just a couple weeks ago, that's a hell of a rally. That's definitely something that matters. So I think, you know, it's going to be really interesting today to see, can the market continue that momentum? And we're going to do a lot of discussion over some of the thoughts I have around potential issues that would be plaguing the market from allowing that to continue, and also potential reasons why the market could continue that upside. On top of that, you've got some breaking news around Tesla. Elon Musk got into a little bit of controversy yesterday, so we're going to talk about some of that controversy and what he's dealing with and why people are not that happy with Elon. Palantir still holding $19. We got to talk about why Palantir is holding that up and seeing if that momentum can continue. Amazon now allows you to buy a car on their platform. Sofi sucked yesterday. Sofi a little bit up in the pre-market, but Sofi still under $7. So we got a lot to talk about, a lot to get into, and we'll see kind of how the market can ultimately deal with everything that's going on. Thank you all for being here. Felicia, Broccoli Bob, I Show Sad. There's a popular streamer named I Show Speed, so I see what you're doing there with the name. Missy Iger, Sethi Roth, John Stevens, Carter Jelly, Mr. Seymour Duck, Kevin, Darkstar, Inbound, Marvin, Eric, J Duff, Troy Hill, Ty Gordon, Kyle. Amit put Bezos back on the screen, and we had to put Bezos there. Lussy Picker, Jeremy, Jason, Noland, Juan Carlos, Hawksung, Alex, David Lung, Kyle F, Dan, Bay Ray, Michael James, Regan. Sofi is being shorted. That's why, yeah, we got to talk about some of the insider buying going on in Sofi. Not insider buying, institutional buying, but also some of the manipulation that's going on. But they are definitely, you know, being manipulated, I would say. Jules, happy Friday, friends. Amit, where is the right-hand Godfather ring? You know, my two rings, I was in the basement last night and I took them off because they were just annoying me a little bit. So I didn't get a chance to wear them. So now today we just got one hand with the rings, but still we got the rings, still these nice little Amazon rings. They don't look like they're from Amazon, right? I mean, I think I could be a hand model. Like I feel like I could be a hand model. They don't look like they're from Amazon. They look like they're like $50 rings you buy at some boutique shop. Yeah, they're pretty cheap, but they look good. Han Soria, breakfast pizza, Kelly, beautiful shirt. Thank you. This is I know you like this color. I like this shirt as well. It's ironic. I've had this shirt for like 7 years now, and it still fits really well. And after I lost all this weight over the past couple weeks, which by the way, I've gained the weight back. Weight update. I was 143 before Vegas. I am 150. I am 7 pounds up. So I have not gone to the gym in like 2 weeks. So I got to get back into the gym. Part of the reason for that is because my dad's car broke down, and then he's been using my car. So I don't really have a car to like drive to the gym, but that's not a good excuse because we have a treadmill at home. So it's such a bad excuse, bro. Like, yeah, I can't go to the gym. It's like, motherfucker, you have a treadmill downstairs. Like, you can run, but got to get back into the gym and get back to that 140 range. All right, so let's get into what's going on with the market. Thank you all for being here. 10-year is down. That'll be the first topic of discussion. Here we go. 10-year is down, and the reason the 10-year is down is because stocks, you know, are seeming a little bit more exciting than the 10-year. Obviously, 10 years go up the yield when bonds sell off. Bonds are being bought right now, and the reason bonds are being bought is because the market has been a little bit more stable around where they think the U.S.'s position is, even if we got a credit downgrade from Moody's. Now, 4.439, this is really spectacular. On Twitter, I tweeted just an hour ago, right when I woke up and I checked the 10-year, we were actually at 4.39. So let me show you that picture as well. share this tab. Yeah, here we go. We were literally at 4.39, which is incredible. I mean, we were at 4.6875 last Thursday. And before that, we were at 5% a couple of weeks ago. So 4.39, not bad at all, seeing that on the 10-year. And obviously now we're getting closer to that 4.2 range if we can ever keep this going. Another reason why the 10-year is down is because the CPI and PPI data, again, were pretty phenomenal. We got some new data today as well over something. I got to try to bring it up real quick. But the new data also indicated that things are cooling off in the economy. So CPI came in really good, right? That's why this rally worked well. CPI worked in really good, or PPI worked in really good, and that came in. That was good for the 10-year. And then on top of that, jobless claims also were really, really good, right? In terms of, well, it's not good, but like we had unemployment rise a little bit in terms of the expectations, and that set the 10-year to be like, all right, well, people are not going to be spending that much money, more money, because jobs are not being in that high effect. So that's the bull side for what happened on the 10-year and why things were so exciting and why stocks went up. However, there are some concerns, and we've been kind of talking about it throughout the entire week around what are some other issues going on in the economy that are leading to, like, you know, the kind of weird state that we are in right now, which is trying to figure out, is this an actual bull market, or is there some pain that we have to go? One portfolio change I made yesterday is I got rid of all my 2025 options for TFC and put them into 2026. So TFC was up. I think I made like 14% on them yesterday. They were up. I got out of them around 415 a contract, bought them around 378. So that was really important as well. And I was just like, you know what? I don't want to worry about it going into 2025. And as a result of that, I kept going from there. Kelly says she's 7 pounds down after Vegas. All is right in the world now. Yeah, I got it, dude. I want to be 135. That's my goal. So 150. It's like, and I know it's probably not even the most healthiest with body fat and weight and all this. I just want to be 135. I want that 130s level. So we'll see if we can get there. But yeah, this was a really interesting move on the 10-year this week. And obviously it's very interesting writ large in terms of how the market reacted to it. Now, one of the things that's really important is Walmart earnings. And we talked about this on Finance Junkies. Here's a chart that I want to share that's pointing to a little bit of, you know, the kind of history around what goes on in the stock market. That Walmart report was not good, and that Walmart report basically showed that the consumer is in a struggling position. This is the average S&P 500 returns around recessionary bear market since 1871. So the curve steepens. We're here where credit tightens, and then after the first Fed cut of the interest rate, and people probably know about this, we see a decline, right? This is the nature of what happens, and then things start to get better, and then we keep going from there. I don't know if this time is going to be that different. Historically, this has always happened. The question becomes, are there signs showing in the economy that this is going to be the same thing that happens in 2024? And let's discuss the signs, if for anyone that kind of forgotten what's happened over the past couple weeks. Number one, we had Bill Ackman cover his bond short. Why did Bill Ackman cover his bond short? Because he covered his bond short because he felt that the economy was slowing down faster than expected. So he said, you know what? This is a good time to get out of this little play I have. That was one sign by a very prominent institutional fund manager saying, I don't really feel that good about exactly how fast the economy is growing, so we're going to cover the short. Number two, you've got Warren Buffett selling out a crap ton of his positions, raising the largest pile of cash he's ever had, now at around $167 billion. The guy's making $8 billion literally just off treasuries. So Warren Buffett has historically been correct. He doesn't get every stock right, but he does get some of these moves right. I mean, historically, he gets these moves right when it comes to raising capital and then deploying when things get bad. This is exactly what happened during the pandemic. And so he was able to get that move right as well. And then on top of that, we're seeing unemployment start to go up with the jobless claims. We'll see if that stabilizes, but if that starts to go a little bit more higher, you start wondering, well, wait a second, if people really don't have jobs, it doesn't really matter, you know, how good the economy is doing, because if consumers aren't spending, then they're in a tough position. And so you put all those things together along with the dramatic decrease we saw in yields. Yes, equities can go up on that, but equities can't just go up based on technical macroeconomic indicators. Equities have to go up because the economy is good in general. And during COVID, I think we had a lot of play money in the economy, which is why the economy came up and why in 2022, the economy decided to come right back down. Does Amit have an unspoken bet to say writ large at least once every stream? No, but you know, when you're thinking of vocabulary writ large, you there's some words I think you guys noticed that I just say. I mean, put it in the chat. Like writ large, I say a lot. I say I think I say regardless a lot. There's this other word I say when we're looking at charts a ton. I forgot what the word is, but I'll probably say it later. I think I say inevitable a lot. It starts with an R. There's a word I say with an R a lot that I'm forgetting, but I know I say it a lot. I'm gonna try to think of it while we watch this clip. Here's Liz Young talking about why the market is in a purgatory state, and let's get her perspective. She's been a bear for the past 6 months. Obviously, the market's gone up, but she still is a little bearish, and she's going to echo some of the things I said.
Gets to our talk of the tape, whether stocks are cleared for takeoff. As Jeremy Siegel said, how about that? Are we cleared for takeoff? Is this all clear as some of the bulls are now suggesting?
No, I don't think it's all clear. I don't think it's a surprise to anybody that I'm saying I don't think it's all clear. I do think that there's been a tone shift this week. I think we're going to look back on this week and realize that it was very pivotal. I would say the same thing if I were here, by the way, on a day that we were rallying. We went from anticipating the end of hikes to now anticipating the beginning of cuts.
Mm-hmm. Pricing them in too, right? March and May and ticking higher.
Not only that, but pulled cuts forward. Mm-hmm. It used to be that the first cut was going to be in July. Now we've got 2 cuts priced in July. The first cut is in May. The reaction to this cooler data, although rational, I think it's rational that we had a rally, we had some relief. We had a period where stocks were really pressured, not only by rising yields, but by a resurgence in inflation. So it's only rational that the opposite would drive a rally. But the size of the reaction, particularly in yields, a 2-year yield that had an intraday move of 24 basis points, that's huge. That's in the 98th percentile of one-day moves for the 2-year. That type of reaction, that size of reaction is a different tone. And if we continue to have this big of reactions on just marginally cooler data, I think that's where people are going to start to get worried that we can't stop it from falling too fast.
Well, now this is what Jamie Dimon was saying, all right? CEO of JP Morgan. He said, so he had some quote a couple days ago, like the market's reacting way too quickly to data that is very short term. And Liz is kind of echoing the same statement, which is like, you can't have this much of a basis point move in the 2-year, within a couple of days simply because of some good data, because that's what creates a lot of uncertainty around if that's sustainable, if that's healthy, and if that drops that dramatically, what does that mean for the larger economy writ large?
It's marginally cooler. You're referring to probably CPI and PPI. I mean, marginally cool, but trending in the right direction.
Absolutely.
Undoubtedly. And that's what matters more. We're not expecting some massive drop month over month or year over year at this point in those reads, but where we're going might be good enough to say, you know what, I think we could actually have this soft landing that some have been betting on. And then if that is the case, why not buy stocks finally?
Yeah, I mean, it's still a possibility, right? I'm not completely counting that out. It's still a possibility that we get things down to a more manageable level in inflation. The labor market cools, but it's palatable. That's still possible.
Isn't that what's happening though?
Yes.
Not possible, but that is what's happening.
That is the current state of affairs, yes.
Right.
The concern is that that's always how it starts. And then it usually picks up steam. It's like a snowball rolling down a hill, right? It usually picks up steam as we go. So there's this concern that can we stop it before it becomes really a big problem? That's what I'm watching this week in these big moves. I think that not just the marginal cooling, yes, that's a positive thing, but the fact that we missed expectations. So now we're not even sure that the expectations about inflation are going to be correct. And it starts to bubble up this fear that, is it too much, right? Did it go down too far, too fast? And now are we looking at a situation where there's demand destruction? None of that's been confirmed, and it won't be confirmed for a while yet. So the market is in this purgatory state. And typically the market actually does hold up pretty well after the last hike and before the first cut.
And that's exactly what I think we've been talking about, right? So what Liz is basically saying here, it's an incredibly interesting take she's having here, which is that if we're getting economic data that shows too much basically demand destruction, too much good stuff that we've been looking for, right? From 10% inflation, now we're at 3.2. We went down a lot from the last report. And if we get to like imagine 2.6 or 2.7 by the end of the year, which with the lag and shelter data, that could theoretically happen. That would be way too much on the economy way too quickly in terms of good news, which means something is breaking. Because again, if inflation's coming down, that means if it's at that rate, that means there's some level of demand destruction going on in the economy. And again, Buffett being concerned about the raising cash, Bill Ackman covering his short, Walmart having horrible earnings. It starts to show you, wait a second, maybe people aren't buying as much as they were before. Big tech will always have good earnings because big tech is big tech, and they're not really the best companies to look at in terms of the gauge of the consumer. But there's other companies out there that are showing that there are some problems. On Costco's Q2 call back in July, they noted that they are seeing massive levels of disinflation and deflation within their raw goods and in their supply chains. And Costco in the United States, I mean, just a massive company in regards to selling food, poultry, all these different types of things, obviously regular shirts and pants and everything consumers need. So from that perspective, you're looking at it like if we get into a real disinflationary scenario and the Fed has to cut rates quickly, that is the best Goldilocks zone of the market where the Fed is deciding that we need to cut rates, make things a lot better, right? Stimulate the economy, but you're stimulating the economy because shit went down. And that's the purgatory state that Liz is talking about that we are all stuck in right now with the S&P at 450. I think the question is for all of us, can our stocks go even higher during this purgatory state? Can we get to an even more fantastic level of some of these equities? Obviously, Palantir up 200% on the year, Disney recovering phenomenally this week. Can we get to that point before we have that nasty market crash? And that's what I think this end of year rally is going to basically be showing us, and see if that ends up happening. Let's take a look at some more macro and some of these charts and get a sense of where some of these equities are as well. PPI shows that as well. Yeah, PPI came in great. And again, those numbers, as good as they are, it's so weird to like look at these numbers and have this perspective, right? Because we wanted good numbers, we need good numbers, and then you get the numbers you want, and you're like, well, it's too good. And even that can be, bad for the economy as well. S&P 451 up 0.23%, not bad. Nvidia 494. Nvidia, I was looking at some of their earnings expectations. They're going to hit it out of the park. It looks like. I mean, it looks like they're going to do really, really well. And so if you got into Nvidia, but like below 350, you're just like, you're doing well. I mean, if you got, could we, it was $108 October 2022. I think the lesson we all learned from that bear market is, and we all probably didn't do enough of it, is we got to buy the dip. Like when shit really goes down, and again, you never know what is the true dip, what is the bottom. But like at some of these prices just look stupid, right? And it's like now it's looking at it, it's insane. Either we're looking at it and we're looking at it with rose-colored glasses, like, oh my God, that was such a good dip to buy, or that sucker's going right back down to that level because it's massively overvalued. And I think 2024, we're going to get our answer, because we either have a recession where shit hits the fan and some of these stocks go down, or we're going to have a market that's thriving off interest rates coming down and no real crack in the economy. Apple at 189. Well, Apple at 190 down the pre-market. Amazon 143. Google recovered pretty amazingly. Remember, it went down to 122 after they missed on cloud revenue by 20 million. Now they're at 136. So a nice $14 bump if you caught the bottom on Google. That seemed like it was a pretty obvious dip to get Google on. I mean, like that was just a stupid reason for it to come down, but Google now up. Robinhood 803 up 1% the pre-market. Robinhood hit 794 yesterday. The Robinhood $10 calls for 2026 are looking, I mean, they might be a little expensive given the premium because we have so much time, but if you think Robinhood's at $10 in 2026, maybe not one of the worst ones in the world to think of as well. Chris says you're listening to way too much Chris, man. I don't know why. It's not like this guy puts out fucking 70-page thesis statements on his Patreon that I end up reading in the morning and then, have to form some opinions on. One good quick shout out to Chris. I mean, reading his Patreon is better than reading any Bloomberg or CNBC article, because the amount of research this guy puts into it is just like a little insane. I mean, look, I'll show you guys right now. I have it here. I'm just going to scroll through it really quickly and you guys can see there's a lot of stuff there, bro. I think he has to spend like 2-3 hours on each one of these posts, right? So today he did a post about risk management, and it's just a lot, bro. Like it legitimately feels like I'm reading. He's got pictures in this shit, got charts, all this shit. I'm like, where are you getting all this from, bro? Like, it's just so. It is good to kind of read and get a lot of perspectives on what's going on. Let's talk about SoFi. What is keeping SoFi so depressed? We got to talk about that because this one has been pretty annoying for me. I got out of SoFi this week, and I think I got out of it in a pretty interesting way, at least all my options. I transitioned a bunch of them to 2026, which was really nice. Oh, this is what I wanted to show you guys. Thank you for bringing up SoFi. This is what I wanted to show you guys. I tweeted this yesterday. It's going to be depressing for me to see, but I don't think you guys ever saw the full position when, SoFi did well. So remember when SoFi got to $11.45 in July 31st? Yeah, this guy that you're looking at right here, this was my position. As you can see, I had 262 call debit spread options. I bought them at 69 cents each. They were trading at $1.78. I probably could have exited them for like $1.65 at the lowest. Most likely that probably was where the contract would have filled. They were expiring in January 2025. And I had a total return of 156% in a matter of 2 months, which equated to $28,000. And did I sell? No, I didn't sell. So the caption was, now that I think about it, maybe I should have taken some profits on July 31st with Sofi. Learning a very important lesson at 26 years old about learning how to understand when to get out the casino. I was actually 25 when I put up this 28 grand that was just staring me in the face. I was up 156. I don't even remember. Today's the first day I'm realizing I was up 156%. Like going back to the screenshot, I'm like, oh, that's actually a lot to be up. Like I didn't even realize at the time I was up that much. So the bright side is better to learn this now than later. I think what I learned from this situation, and part of why you guys joined the Market Open is because I'm very honest and vulnerable with my strategy, right? And with my process. I'm not an expert in the market. I'm trying to get there. I think part of the reason why I didn't sell is because the idea was, okay, I have till 2025. If SoFi gets to $15 by 2025, which I think could happen now, my thoughts have changed. Now I don't know if that'll actually happen in 2025. And this is the nature of the markets, right? You have one thought, and then some data changes that thought. And then fucking insiders sell 50% of their stake. That changes the scenario, right? So my thought was like, well, wait a second. If SoFi gets to fucking 15, I'm not going to be up 28,000. I'm going to be up 130,000. How much would I be? Let me get the right number. So if you just do 262 times 500, 131 minus what, 18 that I paid for it, I would be up 113,000. So in my, 25-year-old stupid brain, I was like, wait a second. 112,000 is a lot more than 28,000. So I should just wait. And I didn't realize, well, wait a second, bro. You got 156% in 2 months. That's not normal. And that's the thing I wanted to highlight and kind of just explain. That's not normal to be up 156% in 2 months. And I thought that was normal. And the problem is in a bull market, everyone thinks their gains are fucking normal. They're not normal. Stocks don't tend to go up that quickly. Obviously, options elevates the risk reward return. But nonetheless, things take time. And if it goes up that quickly, you got to remember, like, wait a second. This shit's not like SoFi at $11 is probably unsustainable. It's probably not going to be that high that long, especially if there's like macro concerns around the market. And at that time, I don't think I was that good of a economist. I'm not that much better, but I'm a little bit better of recognizing, okay, wait a second, like this thing is not going to last forever. You should like take some profits. And I took 0 profits. And so that is the mistake I made. I think the main lesson I learned from that is there's 2 things to take away. Number one, even having the skills to be able to produce those gains and understanding what is an option spread, right? Like what are your targets, yada, yada. I think that is very important to learn because I think in the future, I will make a lot of money, and knowing how to allocate that money responsibly and be able to get, 156% in 2 months because these opportunities will present themselves again. That's important. So first and foremost, the part that makes me not want to go to a bridge and do something is like, oh, well, I have the skill set. And so if I'm just not an idiot next time, maybe that skill set can produce those returns. So that's one thing. And number 2 is knowing that even if you don't live in Vegas, the stock market is a fucking casino. It is a casino. That's all it is. It is a casino. And over time, the casino can produce some returns. But if you got options where you've got this stupid thing made up by the Greeks and their stupid mythology called theta decay, well, some of that time shrinks very soon. And that's why, after looking at that screenshot and realizing I could have, been up 30 grand and I was up nothing, now I exited my SoFi positions for 2025 and said, let me get them into 2026. So in terms of discussing SoFi, that was one of the big mistakes I made this year, and something you got to learn from and hopefully not make that mistake again. But now the price is depressed at 682. Why is SoFi down? Insider selling. Look, I've talked to a lot of people. I know people thought I was giving the insiders a lot of shit. No, bro. Like the insider selling is not cool. You do not sell 50% or 33% of your stake. I don't care what anyone says. I will disagree with you to the death of me. That insider, and I was talking to a guy who has a lot of SoFi yesterday, and he's felt the same. He was like, he called them clowns because they are clowns for selling 50% of their portfolio. I mean, they're good for them, but to shareholders, they're clowns to us right now. They know something. They absolutely know something. And look, Peter Thiel selling 2 million of his Palantir shares yesterday, not his shares, his fund shares, 13% of his stake. That's reasonable because they bought the shares in 2012. A fund has to return capital to distribution partner, to LPs, limited partners. That's the way how a venture fund works. It's been 10 years. It's like, all right, take some profits. These insiders, I think they've had the shares for maybe a couple of years, buying it a quarter before GAAP profitability. Chris Lapointe on the recent call 2 days ago says, we will be profitable in Q4. Makes the definitive statement publicly. I expect them to be profitable. Why the hell are you selling at $8 when they're supposed to be profitable? I feel like those clowns know something. And as a result of that, I still like SoFi. I'm bullish on SoFi, but I need another year. And that's why I changed my option strategy. I am not excited for 2025 for them. And look, if it runs up, then the options I have for 2026 will run up. They won't run up as much as if I had the 2025 options, but I'm cool with that. But I'm not living with the anxiety of 2024 of knowing every single day that SoFi might have some broader issues going on. So then are you starting your Palantir stock with that mentality? No, because again, for me, Palantir is a long-term hold. It's a 2030 hold. I have way more conviction in Palantir than SoFi. And I'm not saying sell SoFi. That's not my argument. My argument is if you have options expiring in 2025 is 14 months away. And I don't know if, given all the developments that have happened, and especially we talked about in 2024, if there is a recession and, banks, SoFi being a bank that's relatively new, has issues, delinquencies, etc., that the options are necessarily the best to hold in 2024. The stock is whatever, right? If you have a long-term horizon on the stock, then you just DCA. But those options were not making me excited going into 2025. And the key thing that hurts about all of this is that I was up on those. Like I was up. Dude, I was 156%. It's not easy to be up 150% on anything. Like any asset, you buy real estate, that thing, it barely moves 10, 15%, maybe a year. Like you're like 156%. And I throw 18 grand into that shit. So I'm up 30 grand. Like that's a lot of money. That's a decent amount of cash. Or I threw 15 grand. It wasn't 18. It was 15 grand at the time. So sometimes you got to take some profits. And that's what I did this week. Obviously I didn't make a lot of gains. I made like 4 or 5 grand this week with selling all the options, but it's important, man. And off that 30, I would have paid like 6 or 7 in taxes, something like that. So I would have had 25 to play with. Could have done a lot of stuff with that money. So, you live and you learn. And as Matt says, it's not about the money. It's about the stupid skill set, not the money. So next time that happens, you're up 150% that quickly. I think I'm gonna take some cash off the table. That'll probably be important. How do you read into insider selling and Noto buying? Wouldn't Noto more than any insiders? Noto buying was a pity buy. Don't let anyone tell you Noto bought because he's bullish. He saw the stock collapsing, and him and Chris Lapointe magically buy one day, and they bought like a couple 40,000 shares, whatever. That's peanuts. Noto made like $100 million off the Twitter acquisition. He has a lot of money. He has a lot. That was nonsense to me. That was him sending to the market, oh, like, don't be too sad that our chief risk officer sold 50% of his stake. I'll buy 40,000 shares. It's like, get out of here, bro. That's ridiculous. I'm serious, but I do not like those insider sales at all. And look at Palantir. Carp sold 50%. I would be calling out Carp right now, but Carp's not doing that because Carp knows that Palantir has a lot of potential, and 50% of your stake is stupid to sell. Like there was a Palantir director yesterday sold 5,000 shares. It's like, okay, 5,000. It doesn't matter. You made 100 grand. Great. Like, congrats. Like it's whatever. That's not something that's concerning. I'm not opposed to people taking profits. If I'm a CEO of a public company one day, I will take some profits too. But like, I'm not going to show my shareholders that I'm selling 50% of my stake because they're going to be like, well, why should I hold this company as well if you don't even believe in 50% of your holdings? So, not exciting to me to see on SoFi. I think there's going to be some problems going into 2024, but I think, we will have a little bit of time to recover, but that's why the options have to go to 2026. Square director bought 27 million at $51. See, that's what makes me excited if I was holding Square, because Square was at $39 and you got a director, if Philip is correct about this, buying 27 million, whether they're dollars or shares worth of the company at $51 after a 20% run. That's what probably gets you really excited, because after a 20% gain, if a director is buying that much, that means they really think they're undervalued. So, we'll end up seeing what happens, but SoFi right now is in a tough position. Now, granted, I do think SoFi is ridiculously undervalued right now, right? Given the growth rate, given the great in deposits, given their ability to attract customers, 717,000 members, 2.9 billion in cash. The biggest issue for them is, can they increase and maintain their net interest income margins and increase their non-interest income sources of revenue, because that's what's been going down over the past couple of quarters. If they can do those two things and get to GAAP profitability, which means we might see a member decline because they're going to have to sacrifice some of that growth in order for profitability next quarter, I think they'll be fine long-term, right? But long-term means 2024 might not be the best year for them. But if it is, that's great. Then that's fine. I'm happy. I still have positions in them, but it might take some time. PayPal is at $57, up 0.37%. Bank of America, Truist is up a little bit. Truist doing really well. Apple $190. Let's start. You guys want to talk about Amazon a little bit? Because Amazon announced something new yesterday that was really interesting as well. Austin, what's up? Thank you for being here. Interesting. Insiders buying. That's a great signal. How often does that happen? Yeah, I mean, look, insiders don't buy always, but when they do buy, I think it is important to, remember that. What is the Peter Lynch quote? That insiders buy for one reason, right? And they're buying because they think the stock's going to go up. So I'm happy when Noto buys, but I'm also like, why are you buying the same day everyone else is selling? It's like, it doesn't seem like you're actually, exciting about buying cars, or buying the shares. It seems like you're just kind of putting it out there to put it out there. Let's get into Amazon real quick. So Amazon is announcing a new partnership. Andy Jassy tweeted this last night, and I thought this was really interesting. They have a new partnership with Hyundai, where they're going to start selling cars. So this will be a part of a strategic partnership with them to make the buying experience easier and add the Alexa experience into their next-gen vehicles and help them transform their customer experiences and business operations through their move to AWS. Looking forward to inventing together for many years. This is really interesting. Amazon and Hyundai launch a broad strategic partnership, including vehicle sales on Amazon.com. Amazon has never sold a car before. They've sold a lot of things. They haven't sold cars. So I think this is just interesting in general for Amazon, because one of the unique things about Amazon is their ability to expand and diversify and reinvent themselves over and over and over again. I would imagine, if they're selling cars, there's a bit of a commission they make on helping facilitate the transaction of that car. And as a result of that, if people start, enjoying the process of buying a car online, which I know there's been plenty of websites, Carfax, there's a lot of different things that sell Carvana stuff. By the way, is Carvana up right now? We haven't checked on Carvana in so long. This would not be the best news for Carvana. Carvana is down. Okay, so definitely the market thinks there's a little bit of competition for Carvana. Carvana was $376 in 2021. Now it's $32. So this one was bad, but it was $3 in January. So it's up 10x this year, which is insane. This is probably not the best for Carvana in general. Now, is this actually going to improve Amazon's revenue or top line numbers or anything like that? I don't really know. How many people are really buying Hyundai cars? And now, if they started expanding it to Toyota, Honda, all that stuff, maybe that gets more exciting. But in general, it's just them showing that they can do a lot more things, which is why Matt says Amazon is the best big tech stock and nobody talks about it. I think people talk about it. I think it's just not as sexy as Google or Microsoft. Because really what's appealing to Amazon is AWS. Nothing else really is that exciting. And I think we'll all agree, if Amazon didn't have AWS, they would be Walmart. They would be an online Walmart that makes no money off what they sell. So AWS is the most exciting. The question then becomes, where's the AI angle? Google and Microsoft have a very clear AI angle that is obvious in terms of anyone that looks at both of those companies and sees that they have a lot of execution, but there's a lot of, if they do it right, then they're going to do it right. Amazon at a $1.48 trillion market cap. A lot of people are asking, what is the AI angle? And obviously their AI cloud is going to be super important. Most people are thinking that Palantir is using Amazon's cloud, by the way, because Palantir is paying $2 billion over the next 10 years to one of the big three for cloud spend. And one of the reasons is Amazon is IL6 certified. And so Palantir does a lot of work in the government. So they have to use a company that's also IL6 certified. And that would probably be AWS. So that's the most exciting part about that. And then outside of that, their advertising is very exciting, but I don't really know what else is the AI angle for Amazon besides making this shopping experience better and making AWS cloud and all the AI infrastructure on top of that cloud also as productive as well. They have AI in their warehouses again. But again, the retail side of Amazon's business has never been interesting to me because they don't make any money off that. Like, I think the margin is 1 or 2%. Now, they could raise Prime 50% and nobody would drop it. I agree. That's exciting because that is a subscription that has a decent amount of margin baked into it. But besides that, AWS is really where all the fun is. Do people even watch Prime Video, bro? I'm probably a lot of people watch it, but I try to watch it sometimes and I'm like, there is nothing on this app that I would ever watch. Like Prime Video. It's big in India. They have a lot of Indian content. So I know people watch it a lot in India, but compared to Netflix, I don't think the content's even comparable. The content's just, at least to me, it's not that good. Amazon is now a monetization engine with ads and third-party seller services. Yeah, ads are really good. Third-party seller services are good. They did $40 billion TTM on ads, so that makes Amazon exciting. It's just that pure AI play, like that Google and Microsoft are turning out to be. Microsoft being a developer platform for AI, Google integrating all these TPUs. I don't know if Amazon necessarily is that. Now, does that mean Amazon is not a good big tech pick? No, because Amazon is also the cheapest by market cap. Meta is obviously the real cheapest, but Amazon outside of the big three, Amazon, Google, Microsoft, they're the cheapest. And so as that free cash flow starts to print with AI increasing efficiency, operations, AWS margins, and the advertising revenue, then Amazon should be a phenomenal buy even at these levels. But it also depends if we get into a recession and people stop buying shit on Amazon. Where does the market take it from there? Amazon is up, by the way, a lot. Amazon was at 115 like a month ago, and it's at 105, I think, on the year. Amazon, it was 89 in March. So it's done really well this year as well. I mean, just like all other big tech, it's performed pretty damn well, 89 to 148. So now the question is, how can the market continue to keep it going? People talk about Tesla robots, but Amazon already has robots in their factories. That's true. It was funny. Steve came on Finance Junkies yesterday. He was like, you know what? I'm getting bullish on Tesla because of the bot. I'm like, Steve, you're not going to buy Tesla because of the bot. I don't think anyone's buying Tesla because of the bot. Like, I think if you're a super bull and you have a Tesla position, you'll mention the bot as part of your thesis. But no one's buying the Tesla stock because they're like, oh my God, Optimus is going to change the world. Because I think it's still too far out right now. Not saying it's not a big thing, but it is a little far out, I would imagine, until that Optimus thing becomes legitimately real. Okay, Chris sent me a picture on Twitter. Let me share this picture around Amazon. All bars and restaurants have to play Amazon for free. I forgot. I totally forgot they have the football. They have the streaming rights. Yeah, that means a lot of people watch Prime. I forgot Amazon bought the football Thursday rights. That is true. So this is Amazon's operating income. Last quarter, they brought in $11.2 billion in operating income. I mean, looking at this chart from 2014 is just insane. 3 years, it's catering at 22%. 5 years, catering at 25%. It was the highest it was last quarter at $11.2 billion. Yeah, that's a good chart to show. I mean, that's one of the bull cases for Amazon. Even at this valuation, that operating income is going out the wazoo. And a lot of that is because of advertising, AWS margins, and increasing prices on a variety of services that they offer. So yeah, that makes sense. Amazon is the cheapest out of the big three in terms of market cap. Meta is the overall cheapest at $800 billion. So let's look at those market caps real quick. So Meta's at $800 billion. Okay, you got Microsoft at $2.8 trillion, all-time high this week. Nvidia at $1.2 trillion. Apple at $2.95 trillion. So Apple being the most expensive from a market cap perspective. And then we got Amazon at $1.48 trillion and Google at $1.74. So all these companies are in the $1.5 to $2.7 trillion range. And the market is basically taking a bet by giving them this valuation that they will be able to get to the $3, $4, $5 trillion range over the next decade, where maybe $3, $4, $5 trillion doesn't seem like that big of a deal. And if that does happen, if these big seven are still the big seven within the next decade, and they would have to be $4 or $5 trillion companies, right? Like within 2034, you would imagine they could get to that level. If not at least 3 trillion. Apple and Microsoft are basically at 3 trillion, right? I mean, that's a lot of market cap baked in. That's a lot of value they would be creating. And I guess the market is anticipating them to be able to do some of that. Any idea when Palantir S&P inclusion is probably going to happen in 2024, but it's going to take a while. Like they have to get all their regulations and stuff in order. But in the next 6 months, you would expect, you would expect to see the groundwork for Palantir to get into the S&P 500. Oh, wow. We had Ray Dalio join CNBC. So after the market open, we'll take a look at what Ray Dalio is having to say. You know who is happy about Xi Jinping meeting Joe Biden? It's definitely Ray Dalio. Dalio has been a supporter of China for a very long time. And I think it's obvious the guy has a crap ton of money in China and a lot of investments in China. But it's been very interesting seeing Biden and China and Xi Jinping discuss. A little update on that. Over the past couple of days, they've met. Biden has given his discussion on what has happened as a result of meeting with Xi Jinping. And one of the core things they discussed was this idea of peaceful competition and diplomacy, right? So they've been kind of having this back and forth around how, yes, we're competitors, but we can't let that competition necessarily stop both of our countries' ability to still progress. Now, granted, I don't know how Xi Jinping felt when Biden said this at a press conference. He called him a dictator after the summit. A reporter was like, hey, is Xi Jinping still a dictator? And Biden was like, yeah, he's a dictator. And it's like, you just told the guy, like, we're going to be peaceful and diplomatic and all this stuff. And I get it. Like, yes, see, here's the difference between Biden and Trump. Trump wouldn't have called him a dictator. And everyone in the chat knows I'm right. Like, you guys all know this. If you were following any of the Trump presidents, Trump wouldn't have called him. I think he refused to call Putin like a dictator. I remember he was getting shit in 2018 because he just didn't call Putin like something bad that every president calls them, because he's a businessman. Like, he's like, yo, I just had a good meeting. I don't want to fuck the meeting up. Like, and the meeting was productive. I got some shit done. We're gonna stop the fentanyl, all that shit. Why would I call this guy a dictator? Whereas Biden, he's going to call him a dictator, right? And so it's just so interesting how this dynamic is being played out. It was really funny today that I saw this morning. Michael Rappaport, he's a popular figure in New York culture. He said that he's now ready to vote for Donald Trump. If you know anything about Michael Rappaport, this guy hates Donald Trump. I mean, this guy, for the 4 years of his presidency, every day he made an Instagram video saying how horrible Donald Trump is as a human being. He came out with a video yesterday saying, I'd vote for Donald. And like, that to me was just insane. And so the political apparatus that we have going into 2024, and that definitely matters for the stock market. I know some people hate politics. I'm not the biggest fan of politics, and I tried not to be political or disclose political views, but just presenting that information. If Trump gets in office or a Republican gets in office, there is going to be a switch in terms of how the market reacts to that. I mean, there's going to be a switch if, Democrats maintain power, especially because our relationship with China really implicates, I think, every stock in the stock market, right? Even Palantir doesn't do business with China, but China affecting other companies, Palantir has to work with those companies. So when your supply chain flips overnight because China invades Taiwan, you're going to need software to be able to manage all that, right? And obviously Palantir can play a role. So there are just so many implications going on into the next couple of years around what happens with China. Josh says, trimmed 15% of my Palantir to buy Kroger. So you bought is that the grocery store? You bought Kroger? Interesting. That's a very interesting sell. I know nothing about Kroger, but the market cap is 30 billion on Kroger, 52-week low 42.05. It's basically not moved this year, I think, or I might be looking at it wrong. It was at $60 in 2022. Yeah, this year has been flat. So the dividend, you're buying it for the dividend, right? 2.7% dividend. Okay. Interesting. Don't really know that much about Kroger, but I guess it's a good buy. I know nothing about it. I got to research more. Put in your thesis in the chat. Why'd you buy Kroger? Why was that exciting for you? David says NHS supposed to be sometime in the middle of November, which clearly once again didn't happen. Can't believe a word they say until we see it. We're getting the NHS deal. I mean, that I'm in my opinion, let me preface, I'm pretty confident we're getting the NHS deal. But yeah, they're going to announce it when they announce it. I don't really care when they announce it anymore. We basically got it, in my opinion, in terms of the stock price. That 7% move 2 Fridays ago, that was because of the NHS. Because remember, the Morgan Stanley desk report leaked on Monday that they got the NHS report. And that is the only, you don't move 7% on Palantir in a day unless there is some rumor. And that's what created the rally for retail to start buying all these shares at 19, because we moved up from 17 to 19 that day because of that NHS report. So I think the market knows we got it. So that's why I think Palantir is priced to perfection. I was talking about this with Adam the other day. Palantir is priced in, bro. S&P 500 and Titan are the only two things that are not priced in. The NHS is priced in my opinion, which is why Peter Thiel offloaded 2 million shares. Remember, you hold shares in a VC fund for a decade. It's been more than a decade. They could have sold last year, but they decided to wait one more year. And 2023 marks a decade. They didn't sell at 12. They didn't sell at 13. They didn't sell at 14. They didn't sell at 15, 16, 17, 18, 19. They didn't even sell at 19. They sold at 1994. That's when their finger was on the trigger and they were like, you know what? Let's offload some of these shares and take some profits, which I don't blame them for. You got to do that, especially with a fund that has a decade horizon. Those shareholders deserve those shares after those gains after a decade, but there's a reason they sold at 1994. Like, that was a good price. So I think a lot of stuff are baked into Palantir. But could it keep going higher? Of course, because retail is retail. People will come in, institutions will get more excited. There's going to be a lot of interest in this range if we start to stay in the $19, $18 range, and people think, all right, 25 is the next target. But there could also be a lot of selling and people taking some of their profits. So we are going to see how this ends up playing out. All right, folks, we got 30 seconds until the market open. Today's going to be a very interesting day. We've had a great week. Does the market sell off, or does the market keep this sucker going? And do we get to continue this beautiful rally that we've had this week? Thank you, everybody, for being here. 740 people. So grateful you are all here. It is 9:30 a.m. The stock market is once again open. Wake your ass up. Here we go. The stock market is now open. Let's get into it. Palantir opens at 1971, down 0.31%. We'll go back to Palantir in a little bit. Amazon opens flat, 142.82. SoFi opens up. We're a little green on SoFi, 676. Not bad on SoFi, opening up just a little bit, 0.61%. Intel is down a little bit, 42.95. They are up almost 70% this year, so Intel has done really well. Disney, 94.74. Disney has come back this week pretty dramatically from that beautiful 79 low that it was at. Now Disney at 94.74. So Disney is doing really well. Enphase at 91 as well. I think Enphase could be a candidate for comeback of the century if Enphase goes from 180 to 71 and it ends up at around 115 before the end of the year. The Enphase is doing really well, 91.17. Nvidia 493, AMD 119, Target at 129. Target at a great earnings. Target is up. S&P 500 450 right now, up 0.04%. So S&P maintained that 450 level. Tesla is down 229. Tesla was down yesterday. I think the Elon stuff that we haven't talked about yet, but some of the controversy he got into is making some shareholders upset, like Mr. Ross Gerber. So we got some issues on Tesla. We'll talk about that in a little bit. Meta is down a little bit, 330. Look at the banks. The banks are up. JP Morgan is up. Bank of America is up. KRE, regional banking ETF, is up. XLF is up. TFC doing really well. We're getting a lot of momentum here. Look at that. TFC 31.74, up about 1%. Banks are up and big tech is down. Banks are up, big tech is down. Google down 1%, Microsoft down 0.70%. Kind of expected that because, Microsoft 52-week highs. Apple is up at 189, down from 190 in the pre-markets, but Apple is at least up. Jesse, thank you for being in the chat. Jesse, thank you for being a channel member as well. Jesse, for those that don't know him, this guy has performed phenomenally this year. I think he's up like 200-300% or something, just like hundreds of thousands of dollars this guy has made, and been a really good resource for all of us on Twitter with just like the best technical analysis that one could imagine. So thank you, Jesse, for being here. Super awesome. Apple at 190, Snowflake at 161. What else do we have? Datadogs at 109. Where's Bitcoin at? 36,375 on Bitcoin. So Bitcoin, it reached around 38,000 a couple days ago, right back down to that 36,376 range. Again, Bitcoin still up really nicely from 25,000 3 weeks ago. So if you bought back then, you're doing well. But now we're seeing some probably normal fluctuations you would imagine when something has run up that much over the past couple of weeks. Robinhood below $8, $7.99. Unity at $30. NASDAQ 14,108. So NASDAQ is down a little bit as well. And we're seeing NASDAQ get out of that $13,000 range. Kelly says SoFi is up because of the 300 shares she bought yesterday. So for those that got into a little bit of SoFi, then, well, SoFi's up 0.22%. Thank you for SoFi being up. Jesse says it's up almost 300% this year. Absolutely insane. Absolutely insane. And Jesse is playing with a lot of money. He's not playing with child money. So when he's up 300%, he's up a lot of money. He is out of his Palantir position. We can talk about that. He said he made about $600,000 off Palantir. Palantir now up 1985. And the reasoning for that, let me actually just pull up his tweet. Let's pull up his tweet. And for those that don't follow Jesse, I would highly recommend following him. He did some technical analysis that my brain is still trying to understand around why Palantir's up. And I think the core thing is it's a double top or something like that, which sounds oddly sexual for some reason. But it's all these technical terms like resistance. Why does resistance to me feel sexual? I don't know. It's like all these words that people say, RSI, like that sounds like an acronym for something that's, not just relative strength index, in my opinion. Let's pull up his tweet and let's see what he had to say around Palantir. Ultimately, he felt that the valuation was getting up there, along with the fact that the valuation along with Peter Thiel selling, right? So that was another thing of just like, look, if this guy's going to take some profits, then probably I should take some profits as well and keep it going from there amid his down bad. Oh boy. Jesse, you tweet so much. I'm trying to find this tweet. Where is this tweet on Palantir? Oh, I don't see it, dude. You tweeted so... Oh, there it is. Perfect. Here we go. I think I got it. No, this one's from May 7th. Okay, Jesse, if you can put it in the chat, if you have... Oh, no, I got it. I think I got it. There we go. Yep. Boom. Got it. Okay, so I believe this is the right one. So he says Palantir still couldn't get and hold above $20 for the fourth day in a row. So this was yesterday. He tweeted this. For this reason, I'm going to liquidate most of my portfolio. There's just better places for me to apply capital in the next few months. To any haters, I've already profited greatly, 600,000, which is amazing. So take a breath and focus on your own lives. Now, on November 15th, this is what he said. He said, Palantir's trying to give it a try, currently over 20 and above the resistance line on the 4-hour candle for the first time since August 2nd. And the tide is lifting all boats. The question is, how does it close today? If we can maintain or go higher than we are, that's a good start. So because Palantir was above 20 around over the resistance line on the 4-hour candle, that was good news to him. But because Palantir couldn't close above it and hold above $20, and part of the reason for that is because Peter Thiel sold 2.4 million shares in 1994, right? So you had a lot of selling pressure right there. That is why he made the decision to say, you know what, it's probably not going to be over 20, or 20 is going to have a ton of resistance. And as a result, taking some of his profits. And, that's reasonable. That is very reasonable. See, when he talks about 4-hour candles, I think about candlelight dinner, right? So that's why this technical analysis, it's very complicated for me to keep reading. So that's, it is what it is. But nonetheless, that is a decent sell. Now we see Palantir crossing $20 right now, up 1.35%, 2004. The question becomes, can it maintain this, right? And this is, I think, the hardest part of everything we're seeing. Remember that a lot of the people that are buying right now, I do not think are institutional investors. A lot of them, I think, are retail investors. And the reason for that is because if you go on StockTwits is a website that's basically Twitter for stocks, and you look at some of the people posting some of the stuff those are the people that are buying Palantir at these prices. I don't see anyone on Twitter, like in the Palantir community, and I see no one in the Palantir community, and I know a lot of people in the Palantir community that are buying it at $20. There's just everyone I've asked, and I've asked a lot of people, I talked to a lot of people, hey, are you buying? They're like, no, we're not buying it at this price. It's just way too much in terms of valuation and overall growth. So the market can be the market and people can pile in, but a lot of people that I think are piling in are people that just don't know Palantir and they just see it up and they're like, oh, let's just buy it. Well, let's check on C3 as well. C3 AI, let's check on them. Are they benefiting from this? Yeah, C3 is kind of stuck in this $29 range. They're still up a lot for the year, but they haven't gone up as much now that Palantir has gone up. The question is, can we maintain this $20 range? I would be super happy if we end the year at 18 or 19, because that means we're out of, hopefully, that $15, $16 range, right? And we've gone higher. And we have a new level of support. But we've been here for about, 2 weeks. I mean, this is the first full week of being at $19. This week is going to determine if the stock can keep going higher or not, And that's what we're going to ultimately have to see, and if Palantir can hold it from there. Again, at $20, I think it's pricey. I like that it's at $20. It looks prettier than the Mona Lisa at that $20 flat. The question is, does the market have momentum to keep it going? Are there enough buyers at 20? I mean, that's the fundamental question. 4.58 million shares have been traded right now. Are there enough buyers at $20? That is the question. And if there are, the thing will keep going up. If there's not, which I would suspect because people have such a low average on the stock, unless they have that long-term mentality to really hold it, or if they're swing trading it, then there's going to be some more sell side pressure there. And the other thing I'll put out, I would not be afraid, or I would not be shocked if I see insider selling over the next couple of days. If that happens, or the next couple of weeks, if we maintain these prices, there's got to be some insiders that are thinking, holy crap, $20, I got my shares at like 7 cents. I should take some profits, right? So I would be really keen to see if that happens. I would imagine it does happen, but if it doesn't, that'd be fine. I called the Peter Thiel thing pretty much to a T. I said last Friday on the weekly, I was like, and someone's going to sell. I was like, there's no way they're letting this shit just run up and no insiders taking profits. And Peter Thiel took some profits, which is reasonable. So we'll end up seeing where it goes from there. Sofi at 673, up 0.30%. Sofi barely moving at all, just kind of stuck right there. Enphase at $90, Target 130. Disney, look at Disney, $95. Absolutely incredible. Disney was at 78 on October 2nd, and it was at 79 on October 27th. Just amazing price action on Disney. And again, that that activist investor called Value Act that came in, putting in a couple $1 billion. That's what got people excited around Disney. S&P at 449, so S&P just turned negative. Truist is up, Bank of America's up, JP Morgan is up, banks are up, Meta is down 332, PayPal, of course, is down 56.49. PayPal also, I have 2025 options that I'm 2 in the red. I would want to move those to 2026, but I'm so in the red now that I can't move those to 2026. So we'll keep it going from there and, see what happens. Blake says Amit is bearish when the stock goes up. I think this is an ignorant comment, Blake, to be honest. I wouldn't say you're bearish when the stock goes up. I mean, if you just watched my Palantir Daily episode yesterday, I covered a lot of stuff going on in the Palantir company that has nothing to do with the stock that is incredibly bullish, but the stock is not the company. And a lot of times the stock can become overstretched. I mean, are you bearish when Tesla was at 414 and you were like, this is a little bit too much in 2021? I mean, if you're the type of guy to say, oh, So, I think Tesla's a little expensive right now, even though you're a Tesla shareholder that's up on their Tesla and you're become quote unquote bearish because the stock is up. I mean, that should give me a break. That's an absolute joke. That's absolutely ridiculous to even say that. Bearish does not, if you're bearish the company, that's different from being bearish the stock. And I don't even think it's bearish the stock. It's skeptical if the valuation can sustain this. And really the time people get skeptical is because they know the company so well. They know that the only reason they're profitable is because they have a bunch of money in T-bills and that growth can't be supported. Like you can't just continue to be making your profits off treasury bills. That's not your business model. You're a SaaS company. You have to produce real profits. Will that happen in the future? Yes. But so far it's not happening. And the valuation is implying that it's happened multiple times over. And so at some level, you've got to be real and be like, well, wait a second, maybe stocks do come down, right? So I think it's important for that. Amit is a bear only on Saturday nights. Yo, last podcast, I didn't say anything because they were going back and forth on the valuation. I was just sitting back, texting my hoes, not doing too much. And they were just going back and forth, arguing about valuation. And I was just like, all right, so next topic, and just kept going from there. Kelly says, if there was an Amit action figure, it would say, we'll keep going from there. I think that's another phrase I use a lot. I use a little bit too much. We'll keep going from there. I don't know why I use that phrase too much, but I don't know. I guess we'll just keep going from there. And someone has to make a list of all the things I say, because I guess when you do this every day, obviously, like there's some shit you just end up saying, right? And so I guess we'll just keep going from there. All right, so Ray Dalio, he was on CNBC. Let's see what he has to say. Legendary investor, founder, huge fund that made a shit ton of money in 2008 when the market crashed. A lot of that stuff with currencies and around the Japanese yen as well. Let's see what Bridgewater has to say.
Remember, you said that the United States, you think, will be facing a debt crisis. Yields have changed pretty dramatically just in the last week or so. You still think that that's the case?
Yeah, it's look.
Real quick, Ray Dalio is not happy with our debt. He wrote an entire book about it, and he thinks that the American empire is falling. So it'll be really interesting to see how he approaches this.
You have a change of 50, 25 basis points and so on. Let's just go back to the basics and the big picture. First of all, let's take the bond yield. The bond yield, roughly speaking, has got to be about what we determine the expected inflation rate will be over the period of time. And there's a question about that. That number probably is settling into the vicinity of 3.5%. That's the right number. There has to be above that a real interest rate. In other words, for those who are holding debt assets, they have to receive a return above the inflation rate by something probably in the vicinity of 1.5%, 2%. So that is going to get you in the vicinity of 4.5%, 5% interest rates. And you're seeing the movement around that level. Then there's the big question of the supply demand for bonds. In other words, the government produces a certain amount of bonds that are in light of in size that is equivalent of roughly the size of the deficit. That means they're going to have to sell a lot of bonds. Okay. And then we look at who are the buyers of those bonds and do they have an adequate appetite? And that's a big risk because we have many who own those bonds have had losses in that. That's not just banks, that is central banks, that is Japanese investors and so on. And so there's a supply demand issue. You'll have these wiggles around there, but those are the fundamentals that will drive it. So as we look forward, we have a debt problem, because you can't keep adding to debt faster than you add to income without that problem. So we're seeing the need for the rise in real interest rates so that the creditor gets an adequate return at the same time as we have a supply-demand balance. So that's how it looks to me. What's happening in the economy is that a lot of money was sent out in the form of checks and the like, and went out to a lot of people. And so there was the household sector did well because the government sector did poorly. They got themselves in deeper debt intentionally. so that the household sector and the business sector could be better off. And then there's the rise in interest rates. What happens from that is that savings of money gradually goes down, and also the debt maturities as they roll forward gradually go up and create a squeeze. So there's an emerging squeeze happening. However, because the unemployment rate is relatively low, and because the compensation levels have been relatively high because of that set of circumstances, the household sector's income has been good. So you have a sector in the household sector, hence the economy as a whole, and I'll include the business sector in that, in which by and large the financial transfer of wealth from the government as it got in debt and gave it to the public sector, it to the private sector, that allowed that to happen. So that is a formula in a punchline. I'm sorry, I'm taking too long. That is a formula for a gradually weakening economy, not a big break in the economy, a slowing of that economy. I think that's what we're seeing. And as a result of that, that's what you're seeing in the bond market, as there's a bit of a easing within that range.
Play this out a little bit longer, which is to say, where do you think interest rates are a year from now, on a very just straight up basis? But then even longer than that, you're talking about the debt problem that we have in this country that's becoming a main feature of debate and a topic, of course, in the presidential election, and what's going to happen come November 2024 and beyond.
As far as the question of where the rates are, I think that most likely, I think the rate structure is going to be staying at its level, perhaps slightly less, but there's a range of uncertainty around that having to do with the supply-demand question. We're now at a period of time where the supply of bonds to be sold will be start hitting the market. And now we have to see the demand issues of that, and that'll be around there. I think that probably in the vicinity of, I would say somewhere in the vicinity of relatively flat. I don't think there's going to be any important change in the Fed policy other than maybe a slight easing as the economy slows down. I think the thing to realize is that the economy will likely weaken. In other words, its growth rate going to something close to zero, plus or minus maybe 1%. And with that exerts a slight downward pressure on interest rates. At the same time, the supply issue becomes an important issue. The second part of your question, I forgot the second part. What was that?
Well, just how much,
I think the longer-term
damage of having these of having this enormous amount of.
We got 2 minutes left. We'll let him finish, but he's bearish. Dalio is not. Dalio thinks all the printing we did, along with the supply of bonds, is setting up for a disastrous 2024. I mean, it's basically seeming like that's what he says, especially if we don't stop spending as much as we're spending.
Of debt, obviously, that's playing into the political debate. But if one, I mean, it sounds to me you're also arguing that if we're going to have a soft landing, that maybe people are going to feel more comfortable holding as much debt as we do, and that the rates are not going to, blow through the roof.
No, I think we're talking about the short term as very distinct from the longer term. The short term we just talked about. The longer term is that we are at a point in which we are borrowing money to pay debt service. And there is a process by which when you keep having debt growth faster than income growth, then that means that you have debt service encroaching on your spending. That's the same for the government as it is for us. And as that happens, and you want to keep spending at the same level, there is the need to get more and more into debt. And the way that works, it's like it accelerates. We are at the point of that acceleration, which creates the supply-demand problem. And it's made worse by the other issues that we're talking about. The internal political issue, the internal social conflict issue there is something that is affecting foreign demand for bonds. For about 40% of our debt is sold to foreigners. And
I mean, there's a good point there, right? As I'll just let him finish, then I'll talk. So you got 30 seconds left.
so there is a concern of the American politics, of the controlling of this debt crisis, and these types of things. So we come back to the same basic question: how strong are we going to be? When we talk about strong, what I mean is also economically strong, and economically strong means financially strong. That means it's just a basic thing. Financially strong means, do you earn?
All right. So I think overall, Dalio has been very bullish writ large. I'm sorry, I'm using that word again, about America and America's debt and our foreign political conflicts. He has a lot of money in China. For those that don't know kind of where his world has changed, the videos that he's put out, all the content he's put out around the changing world order is really this idea that the American economy eventually cannot keep up with the Chinese economy, given the lack of inequality, the lack of growth, and also the amount of debt that we're spending. Now, the argument he made about foreign spending on debt is something we've been talking about for a while, which is that like other people have to buy our debt, right? America's not buying our American debt as much as Japan is buying American debt. And so, yes, America has the theoretical best debt in the world, but if there's rising political issues and geopolitical instability where, countries around the world are like, we don't really want to buy American debt. We want to buy Chinese debt or Russian debt or whatever. That hurts the American economy. If people don't buy our debt, we can't finance the economy. And so I think Dalio's concern there is valid, and he does care about what's going on. I don't know necessarily if his solution is the best, which I believe, to my understanding, the solution is China is the next growing economy that cares more about social equality. I remember in 2018, he went on CNBC and he started criticizing capitalism, right? And I remember Joe on Squawk in the Box, he was just like, what the hell are you talking about? Like, capitalism is the reason why America is the greatest in the world. And his argument was that we have let capitalism become so extreme that now we are creating massive levels of wealth inequality. And Dalio kind of called it correctly, because this was before we printed so much money. And he basically said the government's going to have to support all the people that are in shit because capitalism got so extreme. And what did we do during COVID? We printed a crap ton of money, and that led to all this inflation. So he's not totally wrong about everything. He's called a lot of these macro things correctly. But at the end of the day, it does seem like he's betting on the empire that is the United States to fall down more than it is to maintain itself. And that's where I don't necessarily know if he's right. I think a lot of us would disagree at the end of the day if it's wise to bet against America. But nonetheless, he's bearish. And so that is another reason, right? We're talking about all the 2024 bear arguments that we have in place. That is a more geopolitical kind of macro instability reason, but it is a reason in and of itself that if we cannot get our spending under control, which is, by the way, why I think there is going to be a unique election cycle in 2024, because I think people are going to want to vote for someone that can stop all the spending or that can get the economy at least in better order, can get rid of all this inflation stuff by like actually having fiscal responsibility. If that happens, then that's obviously going to have massive implications on the stock market. And, we'll see what ends up happening from there. Let's go to the last topic I wanted to talk about, which is Gerber. Tesla's down today. And the reason Tesla's down is because shareholders like Gerber have some thoughts about what Tesla's been saying. So let's take a look at this, and then we'll end it off from there.
For joining us now, Ross. I mean, listen, terrible day. Just a very disappointing day on so many levels. Very troubling. Without getting into the meat of that content, are you selling your Tesla stock?
No, I'm not selling my Tesla stock. I'm an advisor for, lots of people who own Tesla stock. And my job is to invest in great companies. And many of my clients care about what they own. And so when I have to spend my day basically either talking people out of Tesla stock, or in a lot of cases, I just can't talk them out of it anymore. And not to mention just deflecting flack. I've just never had this with any company I've ever invested in ever in my life, where the CEO of the company himself does so many detrimental things that it just like is destroying the brand. And it's just, nobody on the board is going to stop him, that's for sure. But the bottom line is that's what's happening. And I'm just not going to mince words about it anymore as a shareholder. It's absolutely outrageous, his behavior and the damage he's caused to the brand. Simple as that.
It is funny that he's not selling his Tesla regardless. I mean, you could say all of that, but if you're not selling your Tesla, it's kind of just like, are you just saying stuff to say stuff? Granted, a lot of shareholders were not happy with what Elon said yesterday.
You know, he's not just the CEO. I mean, he's the founder and builder and face of the company. But many companies, their founders, their time comes and they move on. I don't know if that's the time now, but it sounds like you're saying that Tesla might be a better company in terms of just the way people react to its product and maybe to its stock if Elon Musk, who built it up, were to perhaps step aside.
You know, the truth is, Sully, he already has stepped aside. This isn't about me calling for him to step aside. He has stepped aside as CEO of Tesla. None of his actions are for the benefit of Tesla at this moment. It's all about Twitter and what he can tweet and how many people he can piss off. He actually thinks in his weird world that the things he says matters. But what he's really doing is destroying everything he's built. And that's the super frustrating thing as a shareholder. And just as an investor, one has to look out at the long-term future of Tesla and say, if the CEO is willing to do all this stuff and nobody can stop him, founder, whatever you want to call him, well, what's going to happen to Tesla over the next 10 years? Are they going to achieve their mission if the CEO isn't actually the CEO? Because he's certainly not acting as the CEO of Tesla.
Well, you know, there's probably many people out there that are looking to.
All right, so that's enough on Ross. At the end of the day, Ross he tried to run for the board of Tesla. Ross, remember, is the same guy that called Palantir Nazi Germany, which is just so. It's like it's hard to take Ross that seriously, especially because he is a narcissist and he wants all the attention on him. And you know, the only reason Ross is relevant is because of Elon. Like, let's be honest about that. If he didn't invest in Tesla, which good job, you picked Tesla, but Elon's the one who gave you any sense of. Elon's the reason you raised billions of dollars. Like Tesla is the winner. It's not Google, it's Tesla. So I don't know, to get this upset at him and basically call for his resignation. And it's weird, bro. It's very weird how he's acted towards Tesla. But I think a lot of Tesla shareholders have basically written him off as like a reasonable voice in the community because he just says a lot of nonsense at the end of the day. Yeah, this is hilarious. Look at this comment by Chris. Palantir is 100% behind Israel. Oh my God. That's something Chris, I think I need to use that as a tweet. That is ironic. Ross Gerber called Palantir Nazi Germany, and now Palantir is 100% behind Israel, protecting them from, you know, one of the worst terrorist attacks we've ever seen. So it's pretty incredible how things turn in terms of, you know, what some of the statements he makes. And it's like, you know, you can make a mistake with a statement, but you got to come out and say it's a mistake. He doubled down on that. And it's like, hold on, bro. This is like, this is a lot to be able. He said that on Dave Lee's channel too, which is a Tesla channel, which is hilarious as well. Let's take one last look at the stock market, and then we're out on this Friday. Palantir 1988, down a little bit from 20, so still in that $19 range, which is awesome. Amazon 143, SoFi 666. Of course, SoFi is again down. I don't think we've seen the 660 since last week. SoFi's down. SoFi is indeed down. We're seeing that come down. I guess that was the best sell I had this week, is getting the hell out of those 2025 options and getting some of that cash and then going into 2026. So SoFi is down 667, S&P at 449, Tesla 229, PayPal 56, Meta 333. Banks are still green. TFC, baby, it's up 0.32. Google is down a little bit. Microsoft's down a little bit. A really good week, so I would expect the market to cool off on this Friday. Robinhood below $8. But the S&P in general at 450 still. If we can end the week at 450, that would be really good for the markets, just psychologically dealing with a great week. And yeah, you're going to have some sell-offs, but still a great week. Even Enphase, 72 to 89. Not bad at all. I got to 97 a couple of days ago, which is just incredible for Enphase. Palantir at 1990. All right. That is it for me, folks. Let's do the word of the day, and then we are done on this Friday. We got towards the end of the week, and we are here. George Soros sold all of his Rivian. Interesting. He probably had the 13F come out. All right. Well, Rivian is if you care about Rivian, George Soros is out of that one. That's interesting to know. Word of the day is Brobdingnagian.
Brobdingnagian.
I was close. Brobdingnagian. What is this, bro?
Brobdingnagian.
Brobdingnagian of huge size, gigantic, tremendous. What? As we hiked through the forest, we came across a Brobdingnagian oak tree. What is this word?
Brobdingnagian.
Brobdingnagian. Okay. So next time something is really big and you're like looking at it, whether it's your gains or whatever, Brobdingnagian. That's the word. Next time I see something that's huge, I'm like, damn, that's Brobdingnagian. That's crazy. I'm gonna look like an idiot in front of everyone, look like a freaking douchebag for saying those words, but Brobdingnagian. That's a that's a yoga. Everyone was thinking it, okay? Everyone was thinking it. No one said it because we're all stock market investors. We're not kids, but Chris said it. So Chris said it. But everyone was thinking it. Everyone was thinking, yep, this is the only time you would use this word. There is no other time to describe something big. You would use Brobdingnagian. But Chris put it out there. So admit you've got Brobdingnagian balls for investing in Palantir. Yep, there we go. All right, everyone. That's it. Have a great day. Friday. Thank you all for being here. I've run the numbers on the market open, and the averages I'm seeing in terms of the YouTube analytics for the number of people that stay throughout the 75 minutes and the peak is getting up there. I mean, I think this week we've averaged at least 750. Got to like 1,100 one day, 950 another day. It's been really just remarkable, and I'm just so grateful from the bottom of my heart that you guys come every morning and hopefully get some value. Meet Kevin started his market open again on his new channel, so he's pulling in his thousands of viewers as well because he's Meet Kevin. So competition is here, and that's the good part about YouTube. It is cutthroat competitive. You cannot take your eye off the ball for even a little bit, and people are going to come back, and it's going to be competitive. So the fact that we can retain some of these numbers and you guys show up, it really means the world to me, and it's super awesome. So thank you for being here. I will do my best to keep making it better, more exciting, more fun. We have a guest November 28th. Very special guest. Don't want to say the name yet, but he's big. He's on CNBC all the time. He decided to come on for 10 minutes, and he'll be discussing Palantir and a lot of other things with me. So we'll have him on in a couple of weeks. And yeah, thank you all for being here, guys. I appreciate you. Yes, we'll be on for Palantir Weekly tonight. We'll be on 11 p.m. We'll be doing Palantir Weekly tonight. Are you doing a YouTube analytics video end of the year? Yeah, I can do one in December. I can just show it on the market open in like the end of December. I'll show all the analytics this year. You guys can see how the channel did, how much money I made off this channel, which is not as much as you guys think it is. Really, it's enough to pay some bills, but it's not life-changing. Life-changing money is like when you're doing hundreds of thousands of views a day. I'm like maybe doing 10,000 a day. So we got a long way to go to make YouTube a cash cow. But thank you, everybody. I appreciate it. I will see you on Monday morning. Have a great weekend. Enjoy, spend some time with family, go out, get a nice meal. If you worked hard this week, treat yourself a little bit. And we'll be back Monday morning, Palantir Weekly tonight. We'll do Finance Junkies on Sunday with Jeremy. That'll be a big episode. So I'll see you guys then. Thank you, everyone. Have a great weekend. Bye-bye.